You have a buy rating on Tesla, $267 price target, but is Tesla making cars more profitably than BYD does, and do you expect that to continue?
What Tesla has to do, and so this year was the tale of Tesla cutting prices, impacting their gross margins. We think there was an intent to that, and that over time, they expect to sell a lot of full self-driving FSD software to people who already own their vehicles. That's a big key to the story, because right now, their profit margins have suffered, but we think that's with a long-term plan in place to sell FSD software the same way Apple sells services. And so ultimately, we think it's through FSD software and through the vertical integration that Tesla's the best in the world at. It will ultimately result in higher than average gross margin and profits for their EVs relative to anyone in the market.
Have you ever compared Tesla to a business like Apple? If these two were to compete side by side, what similarities would there be? And is Tesla ever going to grow to the same extent that Apple has? Join us as we investigate these important concerns.
And our next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. You're going to, I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over-under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be
good
here.
Good to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. You know, Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others, and in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking, that's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your take on Apple this morning with Barclays revealing its downgrade over cooling iPhone demand. Do you agree with the assessment there? Your channel checks showing the same thing about the demand picture for iPhones?
I mean, the last 48 hours, it hasn't changed from what we've seen over the last month. I mean, look, and I get some of these calls from a valuation perspective, and many that have been naysayers over the last year. But if I look at iPhone 15, we have not seen number cuts from our checks in Asia, and that's important because I think it shows that this upgrade opportunity is actually manifesting for Apple. I actually think the mix is much.
Summon Creativity, a prominent investment banking and financial services company, recently released a positive report about Tesla, in which it praises the company's batteries, tech and residential energy products, and compares it to a brand like Apple. In order to become the name in energy storage, Tesla is reportedly quickly building an Apple ecosystem of energy products that are harmonized with electrification. This news further sees the main factors driving Tesla's competitive edge and development potential are its innovative battery chemistry, demand and manufacturing processes, as well as its own designs and integration of solar panels, power walls, and electric automobile. This video will examine the aforementioned similarities between Apple and Tesla and explain why the automaker might be larger than most experts and investors believe.
Tesla's infrastructure in manufacturing is leading edge. Why have I read detailed profiles about how BYD's is better?
Look, BYD has some competitive advantages. They have a base that's purely in China. Tesla operates in the United States, in Europe, but Tesla's putting things together from a manufacturing perspective that are way beyond what other companies have done. I mean, they're building these molds in their vehicles for the Model Y, for example, this gigacasting that essentially breaks down a vehicle into only a few parts versus hundreds or even thousands before that. They're way ahead of the curve and ahead of their competition and learning how to manufacture efficiently at scale and innovating in places that other companies are just trying to catch up now.
But will they be hamstrung by the relatively limited number of models that they offer?
It's a great question. Look, ultimately, right now this year, they'll be in and around 1.8 million, about the same as BYD. We expect that to grow a lot in the future. We'll see what they say about 2024 on their earnings call. But we expect this company to be in the tens of millions of units over time. And I think they're planning the same. Look, when Tesla had an analyst day in March, they talked about removing some things from their production line, like rare earths, in order to make sure that they can scale up to this tens of millions of units. So that's their ultimate goal here. And when they get there and they're able to sell additional software to vehicles, we think that'll create a huge improvement in their gross margin profile.
Concord Genuity, Note increased its own price target and upgraded its overall rating of Tesla to a buy. It also predicted that Tesla would report impressive quarterly results on April 26th, with a 70% increase in revenue and a notable increase in net income. That's not even all. The firm went on to disclose additional details about Tesla, comparing it to Apple on steroids. Hey everyone, happy return to Savvy Tesla. Both Tesla and Apple are among the most innovative and powerful businesses in the world. They have loyal fan bases, visionary leaders, and disruptive products. However, some analysts and investors think that Tesla not only rivals Apple but excels at it in many areas. They even compare Tesla to Apple on steroids, suggesting that the company will have a higher growth rate, more vertical integration, and a more ambitious future vision. Could they be right? Let's find out. But first, if you enjoy this kind of information, please click the like button, subscribe, and enable post notifications. Bell will stay updated on any developments pertaining to Tesla. The statement Tesla is Apple on steroids implies that while Apple relies on suppliers and partners for many of its products, Tesla is more focused on manufacturing and vertical integration, producing the majority of its own products like batteries, motors, and software. This, in turn, explains why Tesla's growth rate is extremely impressive. Not only does Tesla own and run its own stores and charging stations, but it also outsources the production and distribution of its goods to Apple. Compared to Apple, Tesla is more visionary and aggressive. The automaker's mission is to expedite the global switch to sustainable energy, and it offers a variety of goods and services to support it in that endeavor. In addition to solar panels, Tesla also produces EVs, while Apple is more focused on enhancing and perfecting its current goods, such as the iPhone, iPad, and Mac. Batterpack's an autonomous driving program and intends to release new products like the Cybertruck, Semi, and Roadster to break conventional norms in the auto sector. Remember that Tesla is outperforming its rivals, and that Apple's innovations are more evolutionary and incremental than revolutionary or disruptive. Have you ever pondered what will happen to Tesla in this dynamic industry? As more electric vehicles enter the market each year, we are compelled to consider the company's future. But do we really need to as we rapidly approach the era of clean energy and greener energy sources, rather than only building electric vehicles EVs? Tesla is also paving the road for a sustainable future in transportation and energy storage production. There are already several new EV businesses in the US attempting to ride the Tesla wave. But let's be real, they've hit some bumps along the way, and the road ahead doesn't appear particularly smooth either. It's like watching an exciting race where Tesla is in the lead and others are racing to keep up.
As always at Vote Down, Votes Not recommendations, we have a nice EV theme today as we did get a lot of these EV figures. So that is something to look forward to. We did not have earnings catalyst, but we did have some of these electric vehicle delivery numbers. So starting things off with the behemoth of the EV world, that is naturally Tesla, which had very much a banner 2023, but reporting Tuesday above consensus deliveries for the fourth quarter. And in the process, it did reach that annual goal. Analysts were generally upbeat about the numbers. We did see that one analyst called this a major achievement as far as their fourth quarter deliveries go, coming over 484,000 units. That exceeded the 480,000 units that had been expected, and another figure called for around 478,000 units. So whatever the forecast you were paying attention to, this did come in above that. Production also came in at 495,000 units, in line with a lot of what had been expected at around 500,000 units, but some were a little bit more optimistic. Again, I think it's what really depends on what prediction you were paying attention to. But the production shortfall versus expectations, some analysts said, reflect this strong inventory control during the quarter. Model 3 and Y deliveries were strong at 477,000 units, with China a clear area of success. Now, Dan Ives, who we have to discuss when we discuss Tesla, naturally did say this was an important quarter for Tesla to show really strong deliveries and the strong momentum into 2024. He has also highlighted the uptick they've seen since third quarter as far as their global checks. So naturally, Ives is one of these notorious bulls, but I do think he makes some good points. We are seeing
some selling today. Initially, they opened a little bit higher. I was watching the price off the open. We're now slightly lower, but not really. I mean, like, not seeing massive outperform or underperformance, just given the rest of some of these major tech names and their weakness today.
Yeah, the market's taken a little bit of a swing to the downside since we began talking here on the show. So I'm not surprised to see Tesla swing negative, but it's still outperforming the overall market. I thought Mark Delaney at Goldman said it best. He just said they're solid numbers, and that's what we've sort of become accustomed to seeing from Tesla. What the market does with them, that could be anybody's guess, and it seems today the market likes them.
Right, and so now to shift gears and look at a name that the market isn't liking so much as far as their delivery numbers, that is Rivian. As Rivian has been more of the younger brother to Tesla as far as its production and some of its production flaws go, but we did see they produced around 17,541 vehicles versus the 10,000 that we saw about a year ago at their production facility that is actually not far from Chicago, but in Normal, Illinois. They did deliver around 14,000 cars in their fourth quarter. This fourth quarter delivery figure was below their third quarter figure and below consensus. For 2023, the company produced around 57,200 vehicles and delivered around 50,000 vehicles, which exceeded actually management's most recent full year production target, calling for around 54,000 vehicles. So what we do know is the company will announce their fourth quarter results now February 21st. It's the next major catalyst to watch for Rivian shares. They have been pretty consistently lower all year long, and I think it's a very competitive market. We're seeing that, but right now you have to be posting big beats to really see any enthusiasm, because you have a name like Tesla that beat and we're seeing weakness. So